Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is August 16, 2023. The Reserve Bank of New Zealand kept rates unchanged for the second consecutive meeting. That was as expected. The central bank did say that the rates would remain high for some time, but they warned also about higher inflation. That helped to kick the New Zealand versus US dollar a little bit to the upside. We are seeing a rotation to the downside currently in the US session. So let's take a look at the technicals that are driving this currency pair. I'll show you what needs to happen to increase the bullish bias after selling has been dominant. We'll start by taking a look at the daily chart. And as you can see, since this high in mid-July or toward the middle of July, the price has been down. We traded to the lowest level going back to this day, November 10th, 2022, in trading here today. If you take a look at the retracement level from the 2022 low to the 2023 high price, the 61.8 comes in at 0.59103. That would be the next target along with this trend line, but the low price in trading today could only get down to a low of 0.5930 before rotating back to the upside. So we are seeing a little bit of a rebound off of the low. The target on the downside remains 0.5903, and then just below that is the trend line coming in around the 0.58, let's say 85 level currently at the moment. If we take a closer look at the daily chart, the rise off the low price in trading here today after the decision saw the price move up. And where did we test? We tested this blue line right here. This blue line represents its 100-hour moving average, and true to form of a key technical level, the sellers leaned against that level and pushed the price back to the downside. So although the price is higher on the day and off the lows, we are off the highs as well, which stalled against the 100-hour moving average. Guess what? Going forward, if this bias is going to turn more to the upside, we need to get and stay above the 100-hour moving average. If we're able to do that, we look toward this area up through here, which includes the 200-hour moving average. It's moving to the downside, as you can see, but that would be a target. Also, this little swing area through here between the 0.6025 and 0.6032 comes into play. These are little baby steps that need to happen in order for the buyers to take more control. Absent that, and they aren't taking control, the sellers remain in control. Recall from last week, the price did move above the 100 and 200-hour moving average. That's the green line right here, but could not sustain that momentum after running into resistance against this swing area through here, where we had a number of different swing lows and swing highs, especially in recent time period here. So the high price moved up to that area and found willing sellers and pushed the price back below the 200 and 100-hour moving average and haven't been above the 100-hour moving average since. So we know what needs to be done to increase the bullish bias in New Zealand versus US dollar. Until that time, the sellers remain in control. So keep that in mind. On the daily chart, there's a support down near the 0.590 level, which represents 61.8% retracement. My name is Greg McCloskey with a technical look at the New Zealand versus US dollar. Good fortune with your trading. Bye-bye now.